Hello traders and welcome to another video review. Today is Friday, February 7, 2025. Let's take a look. What do we have in the economic calendar for today? Asian session data were mostly from Japan in form of the household spending, which beat the expectations of the 0.2% with the actual number of 2.7% or even 2.3% quarterly measured. Halifax house price index in the UK down from 3.4% to 3%. German industrial production down from 1.3% to minus 2.4%, and trade balance is widening towards 20.7 billion euro. The data from the Eurozone are quite interesting. French non-farm payrolls minus 0.2%, and second consumer climate from Switzerland at minus 21, slightly improving from the level of minus 27. ECB the Windows will give a speech at 9:45, and then the mortgage rate from the UK is scheduled for release at 11 o'clock. The other data are from the UK as well. Bank of England MPC member Peel will give a speech at 1:15, and then we got data from the US. Average hourly earnings and non-farm payrolls, of course. Together with the non-farm payrolls, we still have the participation rate and unemployment rate. All of this data are scheduled for release at 2:30, and the market participants expect the non-farm payrolls to decrease from 256,000 to 169,000. Employment change and unemployment rate from Canada is scheduled for release at 2:30 as well. Then we got the member Bowman, FOMC member Bowman, to give a speech at 3:25. At 4 o'clock we got the Michigan inflation expectations and consumer sentiment and consumer expectations. All of this data are from the UK, of course. And then at 4 o'clock we got the Fed monetary policy report to be released. At the end of the day, we got the Atlanta Fed GDP now at 7 o'clock, and then US Barker Hughes oil recount and total recount is scheduled for release at 7 o'clock as well. So pretty interesting day, because we got the non-farm payrolls data from the US. The whole situation with the data releases this week were very, very interesting, because last week we got Fed, this week we got Bank of England, we got ECB, now we got the non-farm payroll. Something is going on every day. Someone will find something interesting for himself. I'm sure about this. Now let's go to another part of our meeting, and we are going to take a look at the technical analysis. We start with euro dollar. Right, the 4-hour chart of the euro dollar, as we said yesterday, is still moving inside the very well established let's say range. As you can see, this range is between two supply zones. Now one of them will be now demand, because it looks like it works and the market respects this zone. Right, let me just change the colors to green, so we don't have any troubles about this. So there you go, between green demand zone and red supply zone. So 1.0355 is the low, 1.0438 is the high of the recent swing, and now we are just moving around up and down around these levels until some kind of a breakout will happen, and we will see some strong movement. What about this trend line? Well, this trend line doesn't actually look like it's being respected anymore. So unless we say that this breakout is valid, and then there was a test, so okay, so we can stick with this. I will make it a little bit thinner so you can guys see what I mean. And the RSI is above the level of 50, and it's trying to move higher. Of course, now the market is trying to produce the green candle on 4-hour chart. So we might see a higher level here just ahead of the non-farm payrolls. Please remember that the better than expected non-farm payrolls would likely mean that the US dollar will give a boost across the board, so the euro dollar might go a little bit lower. So that's the euro dollar between the ranges. What about cable? The situation is on cable is quite different, because we do not longer respect this zones here. So let me stick them to the newest one. So we got now new supply zone, and it's located between 1.2549 and 1.2523. So this is the supply zone. The market wants to move higher. For now, we bounce from the 100 period moving average and the technical support at 1.2361. Sorry. And the market is trying to move higher, so we have a slightly weaker, a slight weakening of the US dollar across the board for now, just ahead of the non-farm payrolls. Momentum is on the 52 points only, so it's positive, but it's not strong at all. So we will see how this will happen. We will see what will happen with this situation here. Bullish engulfing pattern into the technical support. That's always good to know. And now the movement to the upside might be continued. However, big obstacle from the level of 1.2549, 1.2523. So please be aware of this situation here. Let's take a look at the US dollar to the Japanese yen again, and now we definitely have a confirmation of the downside breakout. We are below 100 periods moving average. We are extending the movement to the downside. Let's measure this time using the price range tool. How deep did we go? Just yesterday, 4.91, so 4.98, so it's almost 5%. So it's still not the biggest correction to the downside in the whole movement here. However, it's pretty close. Okay, so because we moved below 100 periods moving average and below the trend line, I think that this might be some kind of a genuine movement to the downside. So last time we bounced from the 100 periods moving average. This is daily time frame chart. This time no such a thing has happened. We are below this average, and the momentum is 34 points only. So we keep moving lower. We are out of the range. Now we need to change the colors of our levels, so we will change the color of this one to red. So now the 154.49 is the technical resistance, and 153.76 is now technical resistance as well. So it looks like this is a very bearish situation for the US dollar to the Japanese yen. US dollar is being sold, Japanese yen is being bought on this time frame. This all happened since the January 10th, 2025. Now let's take a look at we'll look about on gold this time. Let's take a look at the SP 500. That's quite interesting what is going on here. So we are back. We are so back on S&P 500. Just take a look at this. Let me just switch to the 4-hour chart. There you go. All of the sell-offs were about back up, and the market is above the 6,000 points again, and we are heading towards the 6,127 level, which is of course the technical resistance and the swing high from this movement to the upside. The uptrend is being continued. It looks like there is no situation, there is no reason to be alarmed just yet on this market. We keep moving higher. Momentum is strong, 61.78, very strong momentum, bounce from the 100 periods moving average, technical textbook example of the bounce from the 100 periods moving average on a daily time frame chart. The next target is the swing high. And last but not least is Bitcoin, and the Bitcoin, as you can see, doesn't actually do much these days. We still have our swing of reference, swing high, swing low of the last very nice movement. This here, this situation here, this trading here looks like it is some sort of the corrective cycle. Is this one, and as I said yesterday, the range is still pretty close to the level of, let me just remove this one, 96,000 towards 102,500. So this all here looks like it is still some kind of a sideways market, trading from 102,500 to 96,000, up and down, up and down. As you can see, momentum doesn't do much at all. We are waiting for the breakout to the upside or breakout to the downside. Again, please pay attention to the trend line and to the big and a strong demand zone located between 88,991 and 93,407 to the dollar. So this is the range that cannot be violated if the bulls want to continue the uptrend on Bitcoin. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.